And good morning, good evening, good afternoon, traders and students all around the world. This is FXPassion broadcasting you live on YouTube. And this is Forex Trading Course 101. Remember what we are trying to do here. We are trying to build the three pillars. Pillar number one is the strategy and or the system. Pillar number two is the risk management. We are trying to understand how risk management affects the results of the strategy and or the system. And the big one, we are trying to understand how our psychology affects our risk management decisions and our strategy decisions or system decisions, right? And what do champion beginner traders say? Champion beginner traders say, I'm not going to live and die on a trade by trade basis. Oh, I just won. It's just one trade. Oh, I just won another one. Are just two trades, you know? Or, oh, I just lost. It's just one trade. Oh, I lost 3 trades. So what? Are just 3 trades out of 100. So I am not going to live and die on a trade by trade basis. And of course, this is the quote from Mark Douglas. And I have my own quote here. When the market scares you, don't be afraid to do the right thing, right? What are the right things to do when the market scares you? Number one, listen to teacher passion. You know, hello Husnaini, hello Tari. Number two, follow the rules and the concepts. Follow your strategy, right? And also remember everybody that 90% of traders lose money in the Forex market worldwide. And the webinars are not trading or investment advice. The webinars are for educational purposes only. And for homeworks or questions, you have my Gmail contact, my Skype contact, and my LinkedIn contact. Namaste Patak, how are you, sir? Long time no see, right? Everybody, we are genius, right? Look at our position from yesterday. Are we making profits or are we in the red? Is this pure luck or we know what we are doing? Everybody? Yesterday we were talking about this, right? What is better, talking about probabilities, what is better, to go long or to go short? Right? And where is the greatest force? This is from yesterday. Hello SL, hello Zuelius. Yes, Tari, we are going to read your questions. So, is this luck, everybody, that the market is pushing up, or is this knowledge? Right? Is this luck, or, is this pure luck, or this is kind of, like, this is knowledge that we can use in the process? No sound? Sound check, sound check, sound check, sound check. I believe there is a sound, right? What do you think, everybody? Is this knowledge or is this luck? Instead of going short, we entered long, right? I made a profit of 50% of my account in the demo according to the lection using Fibos. Husnani, congratulations to you, but you risk too much. Okay, you risk too much. What about now? You come to some old guy that it's me and you are telling me, oh, I made a 50% profit in 2 days. Instead of receiving a congratulation, I'm asking you, why did you risk too much? It's funny, right? Passion, I made 100% in a week. Don't risk too much. It's funny, right? Sound okay? It's knowledge. Okay, everybody, so we're going to close the trade, okay? We're going to close. Why? Because we are not managing this one. We are just for you to show, right? So, out of the trade, close position. We are not going to look and watch GBP JPY. It's just for you to see. Hello Allah, how are you? I risk only 1%. Come on. Come on. Yes, you risk 1% and you gain 50, right? Come on. Come on, okay? Please, you know, don't guys, you know, I'm an old guy. Don't tell me this kind of things, right? I risked 1% and I made 50. Come on. You know? I sound like Joe Biden, right? Come on, you know, come on, come on. Anyway, stop loss and take profit. Okay, so let's question. Tari has a question. So Tari is asking once again, I need your help to understand two following questions on today's live webinar. Which time frame greater force? It's not relevant. Answer, all of them are relevant. Okay, now let's go on NZD cat. NZD cat. NZD cat and NZD cat. NZD cat. NZD cat monthly chart, NZD cat weekly chart, NZD cat daily chart, NZD cat 4-hour chart, right? So Tari, which time frame greater force? It's not relevant. All of them are relevant. The monthly bias is the strongest, market structure is the second strongest, short-term trend is the third, and monthly candle, it's not just the monthly candle, it's the candle. As lower, smaller time frames, 1 to 4-hour chart in short term is not affected by the monthly or weekly time frame. Yes, they are. Yes, they are. I know what's confusing, everybody. This is what's confusing, right? So we have NZD cat 15-minute chart. Okay. NZD cat 15-minute chart. Okay. So let's do it like this. Let's do it like this. And let's do it like this. We have the 15-minute chart on NZD cat, and we are on the weekly chart on the left side. So what we must learn is that so we are trading on the 15-minute chart, right? And where is the text? Okay, so concepts to learn. Concepts to learn. Okay. Number one, yes, the higher time frame controls the smaller time frames. And number two, I cannot base my decisions. I cannot base my decisions trading on the 15-minute chart based on what is happening on the weekly chart. So this is confusing, right? This is what's confusing. Let me see the chat. Just give me a second, guys. Let me see the chat, because I'm jumping from the email to the Husnaini. You don't believe me? I don't believe you, Husnaini, but you can send me a picture. No, I don't believe you. I don't believe you. No currency pair should up or down for you to risk 1% to make 50. No, I don't believe you. But if I'm wrong, please send me, send to my email the pictures where you entered and the volume, the lot size and the stop loss. Okay? And if I am wrong, I'm going to publicly apologize. Next class, I'm going to say, Husnaini, you were wrong. Husnaini, you were right. I'm sorry. Okay? Cool. Okay. So this is what it's confusing, right? Concept to learn. Yes, the higher time frame controls the smaller time frames, but I cannot base my decision trading on the 15-minute chart based on what is happening on the weekly chart. So let's clarify this, right? Now, the market on the 15-minute chart is falling down. Do we agree? NZD-CAD 15-minute chart, the market is falling, right? And I would say, well, I'm not going to go short because the weekly candles are bullish, right? And this is where we are telling you that you cannot win this game, you know. I mean, it's not relevant, so, but maybe we can clarify like this, okay? The weekly chart is not relevant to the 15-minute chart as general direction, but yes, it's relevant when it comes to momentum. And momentum, we mean what is the market doing right now. Okay? The weekly chart is not relevant to the 15-minute chart as general direction, but yes, it's relevant when it comes to momentum. What is the market doing right now? Okay? Tari, does this make sense to you? So, if the market is falling, great question, Tari. If the market is falling on the 15-minute chart, I cannot say, oh, I'm not going to short the market. You know, I'm not going to short the market because on the weekly, the market is making higher highs, higher lows. Right? I cannot trade like this. But yes, the weekly chart is going to affect the 15-minute chart when we talk about momentum, which is what is the market doing right now. And this is where the higher time frame, yes, it controls the smaller time frame. So this candle here on the weekly, you know, it's still moving, it's going to move, but looks like right now, momentum, you know, it was up, but it's losing force, meaning it's changing from bullish to bearish. Okay, Tari? And everybody else, does this make sense to you? Are we clear what when we say, you know, that the higher time frame controls the smaller time frame? Where is this clear now? We are telling you that the higher time frame controls the smaller time frame, but in the same way we are telling you that I cannot base my decisions on the 50-minute chart based on what is happening on the weekly chart. Because the weekly chart is not relevant to the 15-minute chart as general direction, but yes, it's relevant when it comes to momentum. And the same concept applies to the daily and to the monthly. Momentum, right? What is the market doing right now? If the candle on the monthly, weekly and daily it's bullish, right now all the smaller time frames are moving up. If the monthly, daily and weekly is bearish, all the smaller time frames are moving down. But this is right now, it's momentum, you know. Okay? So don't mix apples with bananas, okay? You cannot short or go long on the 15-minute chart based on what the monthly is doing, you know. Start to become more clear. Yes, sir. And Tari, let me see your second question, going back to the email. Correct level stop loss above below depends on the pattern we are trading. Monthly bias above below bands, yes sir. Market structure wave above below extension, yes sir. Short-term trend within the wave above below the beginning of the trend, yes and no. And monthly candle, if applicable, lower small time frame above below the monthly candle, yes sir. Okay, Tari and everybody else, any more questions? Vientos de abrego, Spanish please. Lo siento my friend, mi no habla español. Mi no habla español. Okay, I don't speak Spanish. Viento, I'm sorry, okay. I don't even know if I said correctly, lo siento. Mi no habla español, very sorry. Okay. But you can put subtitles, you know, on the recordings, right? Zuelius, you said yesterday, right, to somebody else? So write to them, please, if you can, in the chat, in Spanish, that they can put the subtitles, you know, when the recording is available. Okay, stop loss and take profit in market structure, everybody. So I'm going to delete this one, delete this one, delete this one, delete this one, and delete this one. And let's talk about market structure. Daily 15-minute chart, monthly. Okay, everybody, so this is the monthly chart. Stop loss for short-term trends. Where? When you have, because you said inside the bands, inside the market wave, right? So this is the market wave and this is the short-term trend. You know, it depends where you are. If you are able to catch the first trend, then the stop loss goes here. And if you missed the opportunity, right? The Elvis has left the building, the train has left the station. So this would be another entry, counter, trend line break, 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 then the stop loss would go, or below the or above the trend line, or below or above the change in the short-term trend on the smaller time frames. Yeah, yellow, it's not okay, so violet, there you go. Passion, can you repeat please? Yes sir. If you can catch the start of an extension, then the stop loss goes down here, right? I got you, right? Wrong, stop loss goes down here because it's risk reward related, you know. Okay, so if you have enough capital, the stop loss goes down here. If you don't have enough capital, then the stop loss goes here. And every time when the market moves, making higher highs, higher lows, you know, the risk reward ratio just gets worse and worse and worse, right? Why is this? Because if we are risking one, we want to make two, right? Now let's take in consideration this stop loss level. You know, if I would enter here, just an example, if I would enter here, you know, and if I would put the stop loss down in here, clone, and if I'm risking this, look where the profit is, right? So now the question is, how do I know, or what's the probability the market giving me that much profit? And this is risky. you know. If the look at the monthly, everybody look at the monthly swings, right? So extension, retracement, extension, retracement, extension. So back in time this was the market. Back in time this was the market, you know. And if I would enter here shorting the market, okay, for any reason that matters, and if I would put my stop loss up in here, you know, the stop loss is okay, but my entry is not the best one. So 1, 2, 3. So this would be my reward, right? And if this would be the trade, so I would still be in the trade, right? This is the stop loss. I would still be in the trade, but see what's happening? I have no guarantee whatsoever, but also probability wise, you know, if a swing has, so extension or retracement extension, if a swing has 700 pips, 800 pips, 1000 pips, you know, how can I expect, or what is the probability for the market to go up or dip 3000 pips or 300 pips? It doesn't make, it's a ratio, you know, and the answer is low. It's low probability. Why? Because we don't have a crystal ball, right? So, and this is where, you know, yes, the best stop loss, the safer stop loss is down in here. It's the beginning of the extension, but when we are late to the party, you know, the train has left the building, we are up in here, then we cannot put the stop loss down here anymore. I mean, you can if you have enough capital, but the profit, it's the challenge too. You know, like in here, just in the opposite direction, you know. My profit, if I would enter this kind of trade from the monthly chart, my profit is almost at the lower band. And in the meantime, the market can do anything it wants, when it wants, for how long it wants. Tari, SL, is fundamental analysis govern markets to price action? No, sir. Everybody, you can argue with me, you can be angry. The Forex market, it's not fundamentally driven. It's not. Okay? Just look at the news events and look what the charts are doing. The Forex market, it's not fundamentally driven. It's purely technical. You know? Passion, I don't understand. USD CHF. USD CHF monthly chart. I'm going to show you what you don't understand. Everybody, you are looking at USD CHF monthly chart, you know, and this is the upper band and this is the lower band, and we have some other lower band, right? You know, this market, it's not going to change bands. It doesn't matter what election. You know, this market, it's not fundamentally driven. You know, if this market would be fundamentally driven by news, then, you know, on the weekend Biden won, so this market's supposed to fall like down here, right? Like we were expecting a crazy gap downside, right? Did it gap down? No. The market is retracing. Why it's retracing? Well, we have something that is called a pivot point in here. You know? And this is why the market is reacting. And believe me, I have some professors and coaches and gurus online that are disagreeing with me, that are telling you, oh, we need to study the macros on Forex. oh, we need to study the news events on the fundamentals. You know, I'm telling you, the Forex market, it's not fundamentally driven. Most of the time. Yes, there is some news is going to have a drop or whatever, you know. But there is a statistic out there that the news events have a 7-hour effect maximum. And we are going to learn this when the news trading comes. Everybody, you can accept what we are teaching you, and if you don't like it, you can reject. You know, no problem. Passion, I don't agree with you. No problem. No problem, you know. Not a problem. But don't come crying here. Oh, I just lost, you know. Well, my shoulder is not for you to cry. SL, ok? Tari, great, thank you as well. Puedes, Hosnani, it's in a confirmed extension. Why can't we keep our stop loss under that uptrend retracement? Just let... Okay, get me, I cannot get back. Husnani is saying it's in a confirmed extension. Why can't we keep our stop loss under the uptrend retracement? You can. You can. Nobody says that you can't. It's just like a market structure, but in the lower time frame. Is big banks hunting for stop loss or retail traders? The answer is no. SL, you have dishonest brokers that are hunting stop loss, but the banks are not hunting, you know. No. Yes, this is happening. You have dishonest banks, maybe, I don't know, but I've seen dishonest brokers. You know, I've seen dishonest brokers, they are hunting the stop loss. Some of them, yes, they're out there. Be very careful, everybody. Banks, I would say no. You know, I don't know any bank that would hunt for stop loss. But brokers are a different story. You know, brokers are simple companies, and they can do whatever they want. Okay. Husnaini, I don't know if I'm going to answer to you. You know. So when you have an extension and a retracement, and the market starts to push up, the best, one more time everybody, one more time, the best stop loss is down here. Okay? But if the risk reward is in question, or if the capital is in question, you don't have enough money, then of course you can have and use different stop loss levels. Just be aware that the market can stop you out. The market can stop you out, but this doesn't change the thing that this market wave up is still in place. You know, the pattern is still in place, and this is today's lesson, where to put the stop loss in market structure. You are telling it's just the first probability. Yes, sir. Guys, give me a second. sorry about that. Husnani, can I use your pictures for a lesson tomorrow? If you're going to send it to me? Husnani, can I use your pictures to have a class how not to trade? If you say no, I'm going to respect, no problem. Okay, everybody, any more questions? The best probability, talking about not to get stopped out, is down in here. This is the safest place here. Now look at NZDK, everybody, monthly chart. Look at NZDK monthly chart. See, everybody, this is the monthly chart, and we have market structure. We have extension, retracement, extension, retracement, extension, retracement, extension, right? Do we agree, everybody, that this is the market structure on NZDK monthly chart? Okay, thank you very much. Are we going to complete yesterday's lesson for daily hourly? Sorry, no, I just deleted everything. But we are going to get back, not a problem. Everybody, do we agree that this is the market structure? Extension, retracement, extension, retracement, extension. This is the live market. Do we agree? You can say yes, you can say no, you can say I don't know. Right? And we have here a counter trend line break. Right? So this was an entry back in time, right? Yes, yes, yes. Okay, this was the entry. Where should the stop loss go? Should the stop loss go here? Or should the stop loss go up in here? Yes, 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 okay. And we're going to name, this is the stop loss number 1. Okay, and clone, this is the stop loss, edit label, stop loss number 2. Husnain says yes, Allah says yes. Okay, everybody, which one is the correct stop loss level? And remember, you have market structure on every time frame. You have the market wave showing you extension, retracement, extension on every currency pair and every time frame. Yes, 15 minutes too. 15 minutes too, 1 hour too, 2 hour too, 4 hour. Which one is the best, or let's use different word, which one is the correct stop loss level, everybody? We are going to learn this. We had an entry, right? The market broke the uptrend line, also called the counter trend line, right? Stop loss number 2, stop loss number 2. Anybody else? Stop loss number 2, stop loss number 2. Okay, great. Now, what if I don't have enough money to put the stop loss up there? What if, everybody, and this is the thinking process, what, and this can happen on every time frame, what if my stop loss represents 50% of my account? So yeah, I can put my stop loss up in here, but let's say that I have a $100 account and I'm trading on the 1 hour chart and I don't have enough capital. So yeah, this is the safest place, but this, if the market hits my stop loss, I'm going to lose 50% of my account. What now? I'm in this pair and I put the stop loss in the 1. Everybody, what are you going to do? It happens all the time. I'm telling you, Husnaini, you are not going to like it, but I'm going to teach you something, you know. You cannot risk 1% and make 50, you know. It doesn't exist. And I'm going to show you, you know. And don't be angry, okay? I'm trying to teach you something. Trade on lower time frame for safe at stop loss. How can be the lower time frame safer when the higher great commentary. Now let's think together. It's a great comment. Let's think together. How can the lower time frame have a safer stop loss if the bigger time frame controls the smaller time frame? Passion, can you repeat? Yes, sir. If this is market structure and this is the monthly chart, and the monthly chart controls price movement and market direction on all the other time frames, how can a safe stop loss be on the lower time frame that Ari is suggesting? It's based on risk, yes sir, but what are you going to do? So the question is, should I put my, I have an entry, okay, yes I do. The question is, let's make a poll everybody. The question is, should I put my stop loss on number 1 or should I stay out and find another trade? Everybody, let's make a poll. Should I put my, so I understand the theory, right? I understand what the market wave is, I understand the monthly bands, I understand extension, retracement extension, and I understand if the market is going to push down, in this example, cannot break the relevant high. Because if the market breaks the relevant high, this is going to signal the change in the market wave. So I understand that this is the safest stop loss, but I have a problem. This stop loss up in here represents 50% of my account. And Ans Decade monthly chart is just an example. This happens on all time frames and all currency pairs. So what should I do? Should I lower my stop loss to lower my risk, or should I stay out and find another trade? Which one would you choose, everybody? STT, what is STT, Tari? It's market structure on lower time frame. A short-term trend. So, Tari, you would say, let's put the stop loss number 1, right? There were several trades in which I made 50% on my account during the election. Husnaini, it's okay, just send me the pictures. But don't be angry, okay? Take this as a learning experience. Stop loss number 1, stop loss number 1. But I'm telling you, Husnani, don't do this anymore. How can you tell me you don't know? I'm an old guy, you know? I'm an old guy, I've been there, I've done this. SL, find another trade. Okay, so let's see what is going to happen. So Patak and Zuelius are in, shorting the market. We are here, right? This is our short. Let's color code it in green. and clone. If we're going to risk 1, we want to make 2. Clone 2. Okay, now let's see what is going to happen. There is no right or wrong, it's an escape, right? So I want to trade, I want to make money. Put your stop loss on the number 1, it's an escape, you know, but also I am conscious and aware that this stop loss is in the wrong place. But I cannot do other way, you know, it's a decision. Some of you is going to decide to enter still, and remember the monthly chart is just an example. This could be the 15-minute chart, the 1-hour chart, the 2-hour chart. It's your decision, you need to be responsible. Okay, so let's see. 1, 2, and we just lost. And we just lost. Right? Now, what would happen if we would have the stop loss up in here? Right? Or we would just stay out. So the market stop is out and is going up, and one more sideways. So we are here right now. Right? Now everybody, this is the trick and this is the challenging part, right? It's up to you what you are going to do in this kind of entries. Just remember that if you lose 5 to 10%, okay, just don't do it anymore and put your stop loss in the correct level. Because if you are going to do this times 100 trades, you just draw down or burn your account. So in every market structure, the stop loss goes, as Tari sent the email, above or below the most recent extension. Okay? Now, let's check another currency pair. NZD. Which one? Okay, GBP JPY from yesterday, right? GBP JPY. GBP JPY from yesterday. 4-hour chart. You know, something's happening in the market. Fibo is going crazy. You know, GBP JPY 4-hour chart, market structure. The market wave is like this: extension, retracement, extension, retracement, extension, retracement. So if this is the market structure, where should the stop loss go? This is going to be stop loss number 1. This is going to be the stop loss number 2. This is going to be the stop loss number 3. And this is going to be the stop loss number 4. Which one is the correct stop loss, everybody? Stop loss number 1. Stop loss number 2. Clone stop loss number 3. Whoops, not this one. Stop loss number 3. And clone stop loss number 4. Which one is the correct one, everybody? What do you think? If you understand the concepts, how the market wave works, let's make a poll. Which one is the correct stop loss level? If you want to go long. Oh, we have one more to make it funnier, right? To make it more entertaining. Up in here, stop loss number 5. Stop loss number 5. Which one would you choose, everybody? Stop loss number 5, 4, 3, 2, 1. Final trade, Tari, lower lot size first. If still higher risk, stay out of the different trade. Okay, trade different currency pair. Yes. Number 3, number 3, number 3. Anybody else? Anybody else? And yes, everybody, correct. This is the correct stop loss. Now question, what if I don't have enough capital? What if I have 50 bucks in my account? What if I cannot, what if I can? What should I do? Look what the market is doing right now on the 4-hour chart. Most likely the market is going to go up, find resistance, go back to this level of past support and continue to go up, right? What if I don't have enough money to put? What would be the next most logical, right? Yes, stop loss number 3 is the correct. Yes, Moholo, number 3 is the correct one. What if I don't have enough capital, everybody? What if I'm trading on the 15-minute chart, my confirmation time frame is the 4-hour chart, and I don't have enough money in the account to put the stop loss on the number 3? Which one would be the next logical stop loss? And we learned about trend lines, right? So this is the first trend line, the market making higher highs, higher lows, and before adjusting this trend line, this is the other market, the other trend line. Something is happening. My dogs, Fibo and Ichi, are barking. Trade candlestick formation pattern. So, where the stop loss goes? Great commentary. If you're going to trade the candlestick pattern, where is the stop loss going to go? So everybody, I cannot put my stop loss on number 3 because I don't have enough capital in my account. I have the other 2 options. So what is going to be number 4, number 5? Maybe here it's a low, number 6. Everybody, number 6. Clone. Edit label number 6. Stop loss number 4. Okay. Number 4 or 3 depends what pattern you are trading. I don't have money to put on number 3. Below the trend line, another good one. Number 4. Waiting for the retracement and trade after the counter trend line break with stop loss number 5. Everybody whose 9 is set, all the stop loss levels are okay, right? But now that I don't have, so this is the learning part, this is the mindset, everybody. Now that I don't have enough money, capital, to put the stop loss on the structure, now I'm changing and I'm trading a different pattern. So I'm not changing the black one anymore, I am trading the yellow one. Right? Oh my god, I got it, right? So where is the best place that makes sense to put the stop loss? So if I am wrong, meaning, so if everybody listen to this webinar 2 or 3 times, so this is the learning part, this is the mindset and the skill set. So if the black structure is going to push further down, okay, if the black structure is going to push further down, okay, now let's do it differently. So if the black structure is going to push further down like this, we don't know, right? It's a speculation, So if the black structure is going to push down here, okay, from the yellow standpoint, right? Where is the most logical stop loss? So is the first stop loss, which is stop loss number 6, or is the most logical the stop loss number 5, or is the stop loss number 4? What would you say? Which one? Stop loss number 6, stop loss number 5, or stop loss number 4? If the market is going to push down, if the market is going to decide to push down further, you know, which one is going to, which stop loss it's making the most? Now there is no, it's not a probability talk anymore, it's what makes the most sense, right? Stop loss number 4, stop loss number 4, when trading short-term pattern, stop loss number 4. Okay, now here is the question. If the market is going to, everybody, is the market going to break the stop loss number 5, what's the probability of the market changing short-term direction? One more time, yes sir. If the market is going to break the stop loss number 5, what is the probability that the market is going to change the short-term direction? High or low? If the market breaks the stop loss number 5, look at the relevant highs and lows. What is the probability of the market changing the short-term direction? Is the probability high or is the probability low? Don't be shy, we are here to learn. What do you think? If the market breaks or hits the stop loss number 5 and look at the relevant highs and lows, what is the probability of the market to change the short-term direction? High, great. Then why would you put your stop loss on the stop loss number 4? And this is the logic, you know. If the market stops you out on the stop loss number 5 and you have a high probability, of course it broke the relevant low, why would you put your stop loss on the number 4? High, 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 yes sir, high. So for the traders that were saying, oh, the most logical stop loss is number 4, this is your question. If you are thinking stop loss number 4, it makes the most sense. Here is the question. If the market breaks the relevant low and you have a high chance, high probability, still a probability for the market to push down, why would you put your stop loss on the number 4? Because it didn't break the low of the bigger picture. Wrong answer. Wrong answer. You are not trading the bigger picture, everybody. You are trading the smaller picture. And this is where beginner traders, we lose money. We are mixing apples with bananas. I don't have money to put on the stop loss number 3. Now I'm going to put the stop loss number 4. Stop loss number 4, it's the worst. Still a stop loss though, you know, better to have a wrong stop loss than no stop loss. But if you are trading the black structure, the stop loss number 3 is the safest place. And if you are trading the yellow one, the stop loss is number 5, everybody. You know, Husnain is right. It didn't break the bigger picture, but this is the kicker. You are not trading the bigger picture, you are trading the smaller one. Thank you for the comment, Husnain. It's not just you, but everybody who is thinking like this. You are just mixing apples with bananas. You are not trading the black one, you are trading the yellow one. Affordability, have too many to trade? Absolutely yes. Okay everybody, today is Tuesday. We are over your next level. Tuesday number 2. If you want to start your own trading business or a school, trading academy, trading school, whatever, and attract investors, connect and we will talk about your needs and wishes and find the specific business model for your trading business. Okay?